China is the second largest economy in the world, second only to the United States, and their economy is suffering thanks to their $7 trillion real estate empire collapsing, and now economists are worried that this Chinese economic slowdown could be like a domino, pushing the world into a global recession. The Chinese economy can be broken down into a pie like this, and yes, I finally got my whiteboard here in Manhattan. But you have about a third of the economy that is industrial. This is their manufacturing. You know, the United States buys a lot of products and things from China. That's this. Then you have real estate, which makes up about a third of the entire Chinese economy. This includes things like real estate investments, developers, contractors, and everything in between. And then you have everything else. Other. So real estate makes up a huge chunk of the Chinese GDP. Well, in the middle part of August 2022, we got some data that really shocked a bunch of economists, which said that the Chinese economy is slowing pretty quickly thanks to their crumbling real estate market and their strict lockdowns that are still happening today to fight COVID. Now their central bank is going to start cutting interest rates as a way to help stimulate the rapidly shrinking economy. Now let's take one step back and go to Economics 101 with a random guy on YouTube. When you increase interest rates, the goal is to bring inflation down because now you're pulling money out of the economy. But when you do the opposite, when you cut interest rates, that brings inflation up because now, sorry about the rattling of this whiteboard, when you decrease interest rates, that causes inflation to go up because now you're putting more money into the economy. It becomes cheaper to borrow money, so more money flows into the economy. Well, right now we're in a situation where the entire economy is slowing and their central banks are now cutting interest rates to stimulate the economy, but this is also happening at a time where interest rates in August were already reported to be near record highs. So you have inflation at near record highs and an economy that's slowing. Now, the central bank is working to cut interest rates as a way to stimulate the economy, but that will ultimately make the inflation problem worse. Now, let's switch gears a little bit and talk about the real estate issue, because this is one of the biggest issues that's pushing the Chinese economy into a major economic slowdown. And I've been a little bit slow to talk about this purposefully because the CCP has been known to withhold information, and over the last 3 or 4 weeks, a lot of data has come out about what's really going on behind the scenes in the Chinese real estate market. So China is facing one of its worst real estate crises in history, and it's not due to ninja loans or subprime mortgages like we saw prior to the 2008 crash. It's because of the way that the real estate market and the housing market works in China. Now, we've already covered the story in Market Briefs, which is my free financial newsletter, but people in China are generally very good at putting their money aside and saving money. But unlike the United States, where people save their money in savings accounts and CDs and stocks, people in China primarily save their money in real estate. Now, when I say people in China save their money in real estate, I don't mean that they put their money into some crowdfunded real estate fund somewhere. I mean they actually own physical real estate. People save their money up and then they go out and buy a home or they buy a condo. So far so good, right? Well, the way that people invest in real estate in China is also different than the way that people buy real estate in America. Because in China, when you go out and buy a new home, it's called a pre-sale, and you pay for the entire home up front, many times before the home has started even being built. So now you put up all the cash for a home that you expect to be done sometime in the future. This is called a pre-sale, and pre-sales account for somewhere between 70 to 80% of all home sales in China. Now, this is great news if you're a developer, because now what you can do is you can announce the build of this beautiful home. And then you can sell this home for, let's just say hypothetically, $100,000 before you even build it, before you spend a penny in actually putting the home together. So now you collect $100,000 from this home buyer, you have $100,000 in your pocket, and then you can spend $70,000 to $80,000 actually building the home. If you're a savvy developer, you're going to take this new profit that you have, and then you're going to reinvest it back into your company and now develop 2 new properties. Now what do? You go find 2 new buyers, and you can sell these 2 new homes for, say, $100,000 each, and then you do the same thing. You collect the cash up front, and then you're going to invest $70, $75, maybe $80,000 into the builders. That way they can build a home in each of them, and then you're going to take the profits and then go out and announce that you're going to be building 4 new homes, and then you do the same thing again. You collect the cash up front, you then pay the builders to start building, and then you reinvest the profits, and then you do it again and again and again. And now what you're doing is you're able to build a massive real estate portfolio. Maybe you take out a little bit of the profits for yourself as your share, but the more properties you develop, the more properties you build, the more money you make, and you don't have to invest any of this cash up front. People buy the home and then you use the cash to build it, and this system helped the real estate market boom in China over the last number of years. The real estate market was booming, which was great for developers because they were making so much money. It was great for the Chinese GDP because it helped their entire economy boom, and it was great for homeowners and savers because now when you were saving money into homes, your home values kept going up, so investors were making so much money and everybody was happy until the house of cards starts to fail. So when the system works, it works great, and they can make lots of people very wealthy, but it requires 2 things. Now, before I get into these 2 things, if you do want to stay up to date on what is happening on the top finance and business news with things like this, you can check out Market Briefs like I mentioned earlier. It is my free financial newsletter where every day my team is breaking down what's happening in things like the global economy, the real estate market, the crypto market, the stock market, and inflation, and they break it down into a fun, witty, and easy to read email that you can read in less than 5 minutes every morning. I promise you are going to look forward to reading Market Briefs every morning, and it's completely free. So if you want to join Market Briefs, I'll put the link to how you can do it down in the description below. The 2 things that you need in order to keep perpetuating this real estate system that China has is 1, you need more people to actually go out and buy homes, and 2nd, people need money to afford the homes. Let's start by talking about number 1, which is needing people to actually buy homes, because for the first time in 6 decades, the Chinese population has been shrinking because of their previous laws, like their one-child policy, which used to say that you cannot have more than 1 child if you live in China. So now China is facing a population crunch where the population is shrinking, not growing, which means there's less people that actually need to buy a home today than you did a decade ago. And then on the flip side, you also need people that have money to actually buy homes. Well, China, like the rest of the world, is facing high inflation and they're facing a slowing economy. What does that mean? The cost of living is growing. Home costs have grown so much, not just because of their system, but because of the whole boom that we've been seeing with all the money printing over the last couple of years. And in addition to that, people don't have the same jobs as they do before because the Chinese economy is slowing. So you have a slowing economy, you have high inflation, and you have extremely high home prices, which makes it less affordable for people to go out and actually buy homes. This is why you've seen the Chinese central bank aggressively start to cut interest rates now in a time where they already have high inflation because they want to start stimulating their economy again. So now that this house of cards has started to crumble, there are 4 main people that are hurting. It's developers, banks, people, and the government. See, some developers got a little bit greedy. What they were doing was they took the money from this home that they generated, and instead of having all the cash here to pay their builder, they relied on now building these more homes in order to pay this builder. And then they relied on these sales to pay these builders. And then they relied on these sales to pay these builders because it was a way for them to build more homes even quicker if they reinvested more of their cash now. So they didn't keep all the cash in reserves to pay the builder for their initial home. Instead, they said, people are going to buy the next home anyways, so how about we invest the next home's profits back into this home? That way we can build more homes faster, that way we can grow quicker. Again, this was great when times are good, but when the tide goes out, that's when you see who's been swimming naked. That's what Warren Buffett says. And so now developers have been struggling because they don't have enough money to build more homes because people haven't been buying homes. And this is why developers' profits has fallen by almost 90% in China. The second entity that's hurting are the banks, because now people have these loans for homes that are not built and that are not being built or that are underwater. And so now they're just not paying their mortgages. That means that banks are no longer making any money on the loans that they lent out, and so banks and mortgage bankers are struggling because of that. Third are the people of China who are not happy, and this has caused people to protest and has caused civil unrest in the country because now the economy is slowing, you have high inflation, and now you have this whole property mess where people paid for homes that they're not getting and they're seeing the value of their properties drop. And fourth, this ultimately culminates with the government that's now struggling because you have a slowing economy, you have people that are not happy, you have developers developers that are not happy, you have bankers that are not happy, and now the government is trying to stimulate the economy by one, they're working with the central banks to cut interest rates, but the government also passed a 9-figure stimulus bill where now they're trying to help developers find some cash, essentially bail out the developers, that way they have more money to go out and finish some of their developments, hoping that this will get them out of the hot water. The problem is many people feel that this government stimulus is not going to be enough, and then the next question for the rest of the world is, what does this mean for the rest of the world? Because if the Chinese economy is the second largest economy in the world, and then they really start to struggle because it looks like this real estate bubble has just started to collapse, if this continues to collapse, if it continues to crumble, and it really hurts the Chinese economy, what type of shock waves will descend around the world? And so these are the things that economists and central banks and governments are paying attention to, but this is what you want to be paying attention to as well, because now we live in this globalized economy where so many different factors affect one another, even if they're not within your country borders, which is why you want to stay financially educated and why you want to stay prepared, because it doesn't look like we're out of the hot water of this economic slowdown yet. It looks like we're just getting started, which is why you want to stay up to date on what's happening. Market Briefs does that for you for free. So if you haven't joined Market Briefs yet, I got the link for you down in the description below. So what does this mean for you? Should you fly over to China and try to find some cheap real estate to buy? Well, probably not. There's a lot of rules and regulations in China that are very different for Americans, so you want to be very aware of that. But instead, be aware of what's happening here in the United States, get financially prepared and be financially educated. That way, if we do see more economic slowdown in the United States, because it looks like we're heading that direction, and if that is compounded by an economic slowdown, that will create more investment opportunities for you here. So this is where you want to be prepared and you want to be financially educated. Economic slowdowns happen. Recessions happen. Stock market crashes happen. Real estate crashes happen. They have happened and they will continue to happen. And for the majority of people, it catches them off guard. And then it creates fear, panic, anxiety. It causes people to sell at the bottom. It causes people to buy at the top.